Welcome to Investor in the Family Radio, a podcast about learning to invest. My name is Brian Bain, and I'm your host. At Investor in the Family Radio, we believe that you can become a great investor. How? By building the right plan and then sticking to it. May sound boring, but according to Warren Buffett, that's what it takes to set yourself apart. And everything we do here is meant to help you get there, so thanks for joining us. And you can always find more at investorinthefamily.com and subscribe to the podcast at iTunes, Stitcher, and the Google Play Store. And on today's show, we're going to be talking through the Up and Down Wall Street column, or article, I should say, from Barron's magazine this week. And again, this week, Randall Forsyth is the normal author of this column, but apparently he is on vacation. And so Copen Tan, who I have always appreciated Copen's writings in the past, and I hope I'm pronouncing his name right. I need to meet him someday. Hope to meet him someday and confirm that I'm pronouncing his name correctly. And the title of this week's article, talk a little bit too fast here, is Welcome to the News Speak Era. And so it's really not as much directly about investing as normal. It's really, well, indirectly it is. It's a lot more focused upon the Trump administration and his approach and interactions with the media and what that may mean for the country as well as for corporations and otherwise, and then also some follow-up about stocks and stuff toward the end. So I'm going to go through that a little bit briefly and then talk about a few of the dynamics before we wrap up the show today. And so this week's article, basically he starts the article out by talking about what will happen to the White House press briefing room under the Trump administration. Because the fact is that Trump, his last press conference was in July of this year, and he clearly favors addressing the public directly through Twitter and YouTube. And he really technically has no obligation to hold a press conference. And there's a little bit of precedence there. FDR preferred talking to people directly through the radio. JFK preferred talking to people directly through television. And there have been various comparisons to FDR and JFK with Trump in the past in terms of their communication approach, because FDR seized upon the new medium of radio, JFK seized upon the relatively new medium of television, and it seems like Trump is in many ways seizing upon not necessarily a new medium, but relatively new medium of social media, which gives him the chance to directly go to people and not need the intermediary of the media. But really no recent president has been as openly derisive of the press as Trump has. He's called them various things ranging from scum to lowlifes and to the lowest form of life, in case there's any doubt about how Trump felt about the press. And so the question is, will corporate America co-opt the press tactics of Donald Trump? And because you think about it, how many CEOs would rather avoid, quote unquote, facing the press in the wake of a bad quarter or some kind of bad news regarding their company? How many of them would rather directly go to the people, go to shareholders, and have to just forget talking to the press entirely? You know, I can see the temptation of that. And, you know, why would CEOs not just tweet an explanation directly or through YouTube, kind of like Donald Trump does? And so that's an interesting point they're posing, because I think a lot of companies would like that. And I guarantee you, as we'll talk about in a minute, many are considering things along those lines because it gives them that much more control of the message. But there are different things to think about that. Initially, that may sound appealing because you think, oh, I'm tired of the press. And I'm sure everyone listening here has a range of views, some more positive and some less so. But again, we'll talk about that here in a moment. But here I want to turn, and so does Copen in his article, to what I believe it was Oxford Dictionary. Their word of the year is the word post-truth, which technically is two words, but there's a hyphen. So I guess in their mind, that means it's one word, and it's Oxford Dictionary. So I guess they have more authority on that than I do. So the 2016 word of the year is post-truth, hyphenated. And the idea is that a world where objective facts matter less in shaping public opinion than appeals to emotion and personal belief, which I find really interesting because it's kind of embarrassing to me on Oxford's part that they're just now saying this, because this has been going on for a long time. I think the thing is, it's become, the Trump campaign has made this much more overt than maybe other sources have in the past. And specifically, he is ignoring and pitting himself against the media, which is the opposite of what people have done in the past for the most part. But the reality is, any marketer has been doing this for marketing has been doing this to us for years. The idea of post-truth, where you're trying to shape opinions based upon emotion and personal belief and not on fact. And politicians have been doing this for as long as there have been politicians. As in marketing, but that involves business. People have been doing this for decades and decades and decades. So it's not a new idea. It's just becoming much more pronounced in that I think historically there has been at least attempts to appear more truth-like and try to align more with truth, even if it's just in perception. But now with the success of the Trump campaign, there's this idea of like, well, truth doesn't even matter at all anymore as long as I can appeal to what people believe to be true. And again, it gets really sticky here, and it's difficult because we've gotten here because there's been so much deceit already, in my opinion. And again, people, and this is people on the left, people on the right, Republican, Democrat, all walks of life, all political views, religious views, every human being, every camp has guilt in this regard because it's unfortunately a human dynamic. The dynamic to want to coerce other people toward your opinion in order to benefit yourself. And it's unfortunate that it can work that way. And so what it leads to is people don't trust anyone anymore. We don't want to trust the media. We don't want to trust marketing. We don't want to trust any of these things because, well, of course, this person is just trying to figure out a way to get my money or take advantage of me. And if they seem really truthful and honest, well, that means they're just really good at deceiving me. And that it creates a scenario where things are increasingly muddy and increasingly more and more difficult to discern truth, to understand what's real and what we can, and how to make decisions. And that is completely true to us as investors, whether it be reading articles online or company presentations or even financial reports from companies. All of these things have a slant to them. They all have some level of spin to them. There are sources and resources out there that actually do work to be forthright and honest, but we really have to work and sift to find those. And when we find them, embrace them and make the most of them is my encouragement. But so the Oxford Dictionary 2016 word of the year is post-truth. And the idea is a world where objective facts matter less in shaping public opinion than appeals to emotion and personal belief. And so that really fits into this article quite nicely. And that's why Copeland brought it up. So apparently, many in corporate PR are already fielding questions from clients about how they can adapt their communication style for "quote unquote" the age of Trump. Again, just reinforcing the idea that a lot of companies and corporations are seeing the change in the air and trying to find ways they can adjust to the fact that other people will be communicating this way and how they can communicate similarly in a way that's beneficial to them also. So apparently change is in the air and big corporations know it. According to a Pew survey in October, 5% of people in America have, quote unquote, a great deal of trust in the media. 5%. Clearly, there are issues in regard to trust here. And that's where this whole idea of post-truth comes from. And that's where all the talk about fake news and all that stuff comes from. And with Facebook and Google looking to crack down and find ways to limit the power or influence of quote unquote fake news. But it's a really interesting dynamic. And I'll make it clear, I'm not a fan of anyone trying to lie or deceive someone else to try to get a reaction, try to make money or otherwise. And so in that sense, I am no fan of quote unquote fake news and things like that. But it is worth noting that I think the reason all of this quote unquote fake news sites exist is because the quote unquote real news or mainstream news has been, in my opinion, in the opinion of apparently 95% of Americans, they have not done a good job in being forthright and direct and clear and balanced in their views. And even networks that try to identify themselves as clear, fair, and balanced are anything but. And again, there are people in the media who do an excellent job at this, and I applaud them and I'm thankful for them. And may they receive greater and greater platforms. But unfortunately, the way things work is that people get it the way newspapers, networks, anyone else makes money is through advertising. And advertisers pay when they get eyeballs and viewers or listeners. And you get viewers and listeners by getting them riled up emotionally. And so, again, this is not a new dynamic with Donald Trump or with Oxford's declaration of the idea of post-truth. This is not a new thing. But what it's done is continue to erode our confidence in almost all sources of information around us because of the reality that people are going to say what they need to say to get the reaction they need to get the advertisers they need to get more and more money. That's what it boils down to. So again, according to the Pew Survey in October, and then I'm going to go through a couple different, 5 different groups. Then each one of these groups, this is the percentage that the survey says people have a great deal of trust in. So 5% of people have a great deal of trust in the media. 33% have a great deal of trust in the military. 24% have a great deal of trust in medical scientists. Thought that was kind of an odd thing to put in there. 4% of people have a great deal of trust in business leaders, so it's even less than the media. And who are we interacting with in so many cases and trying to base our decisions on information from business leaders, investors? We're trying to rely upon information from business leaders. And apparently 4% of Americans have a great deal of trust in business leaders. And drum roll, please, 3% have a great deal of trust in elected officials. So among the least trustworthy, or the people who have the groups that have the least number of people saying they have a great deal of trust in them are the media at 5%, business leaders at 4%, and elected officials at 3%. And those are probably the 3 most influential groups in the country and the world. So think about that for a few minutes. But again, Copeland does a good job of bringing up the fact that Trump did not invent this scenario. He says the internet did. I don't think that's true either. I think the internet maybe escalated the situation and amplified it, and certainly, but did not create it. And so you have things like the news cycle, the 24-hour news cycle, where you're just continuously pressed to come up with new things to talk about. So you create stories where there aren't stories, and you have the growing illiteracy in America and the world. And so people are not searching for facts on their own. They're just listening to sound bites, which fits into the next idea, shortening of attention spans. You hear a soundbite and you make a decision, and you don't research it. You don't try to find truth behind it. You don't try to prove it or disprove it. The ease of social media, where anyone can have a platform, regardless of responsibility with that platform. Clickbait headlines, which is the idea I mentioned earlier, where people will say things and create headlines purely for the purpose of getting people to click on them, because that's how people ultimately make money. Businesses ultimately make money. And I get that idea. I'm running an online business. You are listening to an online business owner. Investor in the Family is an online business. I understand the clickbait idea. And I try to work to always create headlines that obviously make you want to open whatever I'm doing, but I want to make sure when you open it, what you find there is truthful and is in line with the headline and is not a letdown, but is makes you glad you clicked there. And I think that's the difference. And I hope that I'm doing a good job there. And if not, feel free and let me know, and I'll do my best to improve. Customizable news feeds in Facebook and elsewhere, where basically you just keep getting fed what you want to know, as opposed to necessarily maybe what you ought to know. There's a shrinking civil discourse and a shrinking common ground among Americans, which is such an ironic dynamic, because the great promise of Facebook and these other social media platforms is the idea of bringing people together, of greater unity and so on. But in reality, they've done complete opposite. They've brought more division, more disunity, increased silos, and on, because the reality is, there's this dynamic in human nature that as we become more and more, I'll say, powerful or wealthy, those two things go together, we want more and more independence and freedom. And so you can think about it with houses. The more wealthy you are, you have a bigger house with more rooms and bigger rooms, more opportunity to control your own individual environment. Then everyone in your family has their own room, and in the room, everyone has their own TV and their own computer, and you have Wi-Fi, so everyone can access the internet and have power wherever they are in the house. and your community is like the neighborhood you're in is more excluded from the rest of the community. Your house is more excluded because it's on a bigger area of land, so on and so forth. Same with automobiles and everything else, with schools. And the reason I'm saying that is there's a desire in human nature to have absolute control over your environment, right? And so basically, the more ability we have to control our environment, in the vast majority of cases, human beings exercise that ability to control their environment, even to the detriment of others. And we see that in the social media dynamics and these online dynamics and media dynamics, where we want to listen to what we want to hear because we want to be told that we're right, and so on and so forth. And so all that being said, Trump knew the media could not afford to not cover him. You've read the stuff about how much he did not have to spend on advertising and marketing because the media did it for him. And so, as Copen says, welcome to a post-truth era where facts matter less. And think for a moment what the world can do with that. And that can be a very scary proposition because the opposite of truth is lies. And I don't believe in the idea of half-truths and half-lies. Something's true or it's not. And if we are in an era of post-truth, that means we are in an era of lies. And an era of lies is a very scary place to be. As a citizen, as a father, as a human being, as a business owner, as a voter, as a investor, and everything else. It's a scary place to be because lies are only dangerous. And so may I and may we all here in the Invest in the Family community stand for truth. And may we seek truth and pursue truth and protect truth wherever we can. And so bringing this back into investing dynamics a little bit more, last week stocks did take a breather, but the rotation toward domestic growth is intact. And that, again, comes in line with expectations according to what President-elect Donald Trump has been saying, with his focus on wanting to build America, wanting to help with infrastructure development. And so the investors are continuing to shift money toward stocks that could benefit from domestic growth. And some companies that have done exceedingly well with that have been bank stocks have done really well. Companies like U.S. Steel, the ticker is X for that stock, has been on fire, as have others since the Donald Trump victory back in beginning of November. And let's see, Brent crude prices have surged. The expectation of rising inflation has lifted 10-year treasuries to a 17-month high, which technically should be exciting because developed economies around the world have been pushing for inflation. The U.S. Federal Reserve has been pushing for inflation. That's been a big part of low interest rates, a big part of quantitative easing, quote unquote, money printing, all of that type stuff. A big point has been to increase inflation. Same in Japan, same in Europe and elsewhere. But here's the issue. Rising inflation is fantastic if it is accompanied by rising growth. So if we start seeing inflation, that may be good, but if we do not see economic growth rising in tandem with inflation beginning in 2017, we could have a problem, because then inflation becomes a really, really bad thing. There are plenty of the countries in the world we can look to as examples for that. So all eyes are on 2017 to see whether growth will come. Meanwhile, the China stock market has actually been outperforming the U.S. markets in the last few months since the elections. And a significant concern, and it's been a lot in the news recently regarding President-elect Trump's interactions with Taiwan and Japan, is that an inward-looking U.S., and again, the idea of the U.S. looking internally, like, hey, how can we build ourselves? How can we take care of ourselves and less focus on the world and international community, is really good for China, as China is very clearly and aggressively looking for opportunities for power grabs. I spent a lot of time in East Africa and other parts of the world, and it's very clear that China is working very diligently to build their global presence throughout Asia as well as Africa, and I'm confident it's happening in many other places as well. And China would love for the United States to pull out of the global community so that they can fill that void, because a vacuum creates opportunity and will be filled. So if the U.S. pulls back and creates vacuum, someone else will fill that vacuum. Something else to think about in all of this. So again, we find ourselves as investors with continued uncertainty, and the stock markets usually don't like uncertainty. They're acting like right now like we have certainty because of what Donald Trump is promising, which is really ironic because on the flip side of that, everyone talks about how he may not be the most trustworthy person in the world. And that's not a statement about him as a candidate or a politician or anything else, but I think it's just kind of true that there have been things said that may not necessarily be true, and many changing opinions. So the bottom line is we don't know what to expect in 2017 from President Trump, just like we really don't know what to expect from anyone who would have been elected this year. So in that regard, the markets are doing well because they are hoping for the best, and I hope for the best also, but I think it's good to be pragmatic and realistic. So one of our goals here at Invest in the Family is help protect you and all of us from big mistakes. And I cannot say when the bull market will end. I cannot say what that end necessarily will look like. I can say that markets continue to be overvalued, not to extreme levels, but they are overvalued, as I mentioned last week. And there continues to be increasing uncertainty in the world. This idea of quote-unquote populist and nationalist movements is growing in Europe and elsewhere. I do not see significant reason to think that is going to ebb anytime soon, because my thesis on this scenario is that the longer economic stagnation or decline takes place, the more people are going to be struggling financially and economically. As people struggle financially and economically, they become more desperate. And then desperate people make desperate decisions. Whether you like those decisions or not, and that's a whole nother conversation, but I think that is the true dynamic for human beings. And so I think we will continue to see people in the developed economies, the U.S., Europe, and elsewhere, making desperate decisions, progressively more and more desperate decisions. And I hope those decisions, even though desperate, will still be good decisions. But in desperation, we don't necessarily always make the best decisions. So that means progressive instability. And I hope this is not true, but it does lay foundations for various levels of conflict globally of different kinds. And again, lots of reasons for uncertainty, which means lots of reasons to be cautious with our investing. What that means for you is your decision. And I do know a lot of people that I respect who are saying a similar message and are talking about the benefits of a healthy portion of cash in your portfolios. Again, that's your decision to make, but I know a lot of people I respect who are making that decision themselves. And the thing about this too that can be difficult is timing, because no one knows what's going to happen or when. I do believe that we are on the path that I just described. How long it takes, no one knows. It could take years. There could be a black swan event today that could change dynamics. That's happened plenty of times in history. But the idea is don't be greedy. The way bull markets work and anything like this work is you start seeing things that concern you as investors and as people. And so we're concerned, we're cautious. And that's the idea of the wall of worry, that the markets and otherwise keep climbing that wall until we decide, until we finally become complacent and say, fine, I'm tired of being cautious and worrying. Let's just join the party. And that's usually when the party ends. And that's usually when the crash happens. So continue to be smart. Don't give in to a world of post-truth, and don't give in to your emotions when investing. And again, we're here to help invest in the family, and I would love to help you in any way that I can. Always feel free to email me at Brian, Brian, at investinthefamily.com, and I'd love to help you any way that I can. I do answer all emails, and so I would love to hear from you. And again, thanks so much for joining the show. And if you have, again, you can get full show notes and all that kind of stuff with links and everything at investinthefamily.com. Don't forget to subscribe to the show, iTunes, Stitcher, or the Google Play Store. And you know what? That's it for this week, or for today. This is Brian, and thanks for joining the family. The information and opinions contained on this podcast are for educational purposes only. The information does not consider the economic status or risk profile of any specific person. The information and opinions expressed should not be construed as investment trading advice and does not constitute an offer
or an invitation to make an offer to buy and sell securities.